Let's talk about the irony of the decade, maybe.
Okay.
We spent all this time analyzing the death of the shopping mall, the retail apocalypse, the unstoppable rise of the one-click economy.
Right. The narrative is always the same.
Yeah,
Digital eats physical.
exactly. Software eats the world. If you have a storefront, you're a dinosaur. If you have a cloud server, you're the future. It's that simple.
Been the standard operating procedure for the 21st century, yeah.
Right, which brings us to this absolutely baffling report on the desk today. Amazon, the company that effectively invented the expectation that you never have to leave your house again, is breaking ground on a project in Orland Park, Illinois.
Okay.
And they aren't building a data center. They aren't building a standard fulfillment warehouse. They are building a store.
A store?
Or a store that is, quite frankly, absurdly large.
It creates a bit of cognitive dissonance, doesn't it? I mean, from what I'm reading, we're looking at plans for a physical retail space measuring roughly 225,000 square feet.
And I really want to pause on that number, 225,000. Because in retail real estate, that number is everything.
It's destiny.
It is destiny. It's not just big. It's a statement of intent that completely contradicts, the current trend of retailers shrinking their footprints.
Oh, completely.
I looked up the comps before we started. An average Costco, which is basically an airplane hangar where you buy bulk cheddar,
Right.
is about 150,000 square feet.
And that includes all the back-at-house storage.
Exactly. And a Walmart Supercenter, the absolute titan of we sell everything, averages around 179,000.
So this is significantly bigger.
Yeah. So Amazon is coming into the Chicago suburbs and dropping a facility that is nearly 50% larger than a Costco. This isn't a supermarket like the headlines are saying. This is something else.
That is the key distinction. If you were just launching a grocery store to compete with, say, Kroger, you'd build a 60,000 square foot box and call it a day. When you secure a footprint of this magnitude, you are signaling that the function of the building goes way beyond just browsing aisles. It has to be a hybrid facility.
Okay, so that's the mission for this deep dive. We have to decode the strategy here. Why is the world's most efficient digital retailer pivoting to the messy, high-overhead world of physical megastores? And maybe more importantly, is this actually a smart move, or is it a hubris-fueled blunder?
Well, because their track record with physical retail isn't exactly spotless.
It's spotty at best, and that's putting it politely.
It is.
We'll get to the failures in a minute, but let's stick with the anatomy of the giant for a second.
Okay.
We know it's in Orland Park. We know it's massive. But what's the actual utility of all that extra space? If I'm walking into this building, what am I even looking at?
Well, the report stated it's a mix of groceries and household goods, but you have to read between the lines of the square footage.
Go on.
A traditional retailer wants to maximize the selling floor, the area where you, the customer, walk around.
Because that's where the money comes from.
That's where the revenue per square foot comes from. But Amazon plays a different game.
You're thinking this is a mullet strategy. Business in the front, party in the back.
You could put it that way, yeah. I'd argue it's more retail in the front, robotics in the back.
Ah.
The only way a footprint this size makes any economic sense for Amazon is if a huge portion of that 225,000 square feet is essentially a micro-fulfillment center.
A dark store.
Precisely. Just imagine a wall. On one side, you have customers pushing carts, buying bananas, picking up a TV.
Right.
And on the other side of that wall, you have an automated hive of robots picking orders for same-day delivery for everyone within, say, a 10-mile radius.
That completely solves the last mile problem, doesn't it?
It attacks it head-on.
We always talk about how expensive it is to ship one tube of toothpaste from some huge warehouse 3 hours away. But if that toothpaste is sitting in Orland Park, 5 minutes from the customer,
the unit economics they change completely. That's the only way to justify the overhead. You're leveraging the rent you pay for the store to subsidize your delivery network.
So the store becomes a dual-purpose asset.
Exactly.
Yeah.
Walmart's been trying to do this for years, right?
Right.
Retrofitting their supercenters, having employees pick online orders from the shelves right alongside customers.
Which is a nightmare, by the way. I hate that. Dodging those massive pick carts while you're just trying to buy cereal is a terrible experience.
It's terrible. And Amazon has the luxury of building this from the ground up. They can design the flow so the digital fulfillment and the physical shopping never actually clash.
So that extra 50,000 square feet over a Walmart isn't for wider aisle.
No. It's for high-density, automated storage that customers will never, ever see.
It's interesting you bring up Walmart because this feels like a direct assault on their fortress.
Oh, it is.
For a long time, Amazon owned the long tail, the obscure stuff you can't find in a store. Walmart owned the immediate need, groceries, toilet paper.
And groceries are the final frontier for Amazon. It's the frequency driver.
Right.
You might buy a book from Amazon once a month. You buy food every week. If Amazon really wants to be the operating system for your life, they need that weekly engagement.
But they tried that, didn't they? They bought Whole Foods back in 2017. That was supposed to be the checkmate move.
It was a significant move, for sure, but Whole Foods is a niche. It's whole paycheck.
Right.
It appeals to a very specific demographic. It doesn't scare Walmart. You don't go to Whole Foods to buy a set of tires, a 60-inch TV, and a gallon of discount milk.
And that's where this Orland Park concept feels different. It feels less like a boutique and more like a blunt instrument.
It is.
But here's my skepticism. Amazon has tried to build their own physical concepts before, and they've been, well, underwhelming.
You thinking of the 4-star stores?
4-star, Amazon Books, Amazon Style, they've all been quietly shuttered. They just felt like data experiments, not real stores. They lacked any soul. So why should we believe they can pull off a 225,000 square foot megastore when they couldn't even make a small bookstore work?
That is the completely valid counter-argument. Amazon is an engineering company, not a merchant.
Explain that.
There is an art to physical retail, to merchandising, atmosphere, the treasure hunt aspect that a place like Costco has absolutely mastered. Amazon tends to view retail as a spreadsheet problem.
Right, the efficiency paradox. In a spreadsheet, physical retail is terrible. You've got high rent, theft, spoilage, utilities. Online is just cleaner.
But online has a ceiling, and I think Amazon has probably hit it. There is a huge percentage of retail spending. I mean, trillions of dollars. That simply will not move online.
People want to squeeze the avocado.
People want to squeeze the avocado. They want to see how big the TV box actually is before they try to stuff it in their car.
So they are forced to enter the mud.
They are. But the difference with this Orland Park project, compared to the failed Amazon-style stores, is the scale and the utility. The style stores were trying to be trendy. This new store is trying to be infrastructure.
Let's dig into that, the infrastructure angle. We mentioned the micro-fulfillment idea, but there's another layer here, the financial safety net. I mean, we aren't talking about a struggling department store trying a Hail Mary pass.
No. We are talking about a company with a market cap of, what, $2.5 trillion?
It's a number so big it almost loses meaning. But what it means practically is that they can burn money for years if they think the data they get is worth it.
And you have to look at where their profit actually comes from. It's not from the online store. It's AWS Amazon Web Services.
The cloud.
The cloud division is the cash cow that subsidizes everything else.
So AWS pays the bills, which allows the retail side to build a 225,000 square foot laboratory in Illinois.
That's it. If this store in Orland Park loses money for 5 years straight, it doesn't matter. Not really.
Yeah.
Not if it provides the data and the logistical foothold they need to finally figure out the grocery puzzle.
A company like Target doesn't have that luxury.
No, they need immediate ROI. Amazon is playing a totally different game. It's called customer lifetime value. It's the prime ecosystem lock-in. If this store keeps you inside the prime ecosystem for your groceries and your electronics, and it stops you from renewing your Costco membership, that is a win for them, even if the store's operational margins are razor thin.
It's almost like predatory pricing, but on a structural level.
It is.
But let's play devil's advocate. Walmart and Costco are incredibly good at what they do.
Decades of experience.
Right, decades of supplier relationships. They know how to run these boxes efficiently. Does Amazon actually offer a better experience or just a more tech experience?
That is the trillion-dollar question. Just putting smart carts in the aisle. You know, the ones that scan your food as you drop it in.
I've used those. They're cool for about 5 minutes.
Exactly. And then they're just annoying. Technology, for technology's sake, won't beat Costco's $1.50 hot dog.
No.
Or their curated selection. Costco wins because they edit the world for you. They give you 2 choices of ketchup, and they're both good. Amazon is the everything store. They give you 5,000 choices of ketchup. Bringing that infinite shelf to a physical store is a merchandising nightmare.
That's a great point. 225,000 square feet is big, but it's not infinite. They have to curate, and curation has not historically been Amazon's strength.
Their strength is search algorithms. You can't put a search bar on a physical shelf.
Well, unless they change the interface of the store itself.
House.
What if the app guides you? You build your list at home, you walk in, and your phone directs you with, like, augmented reality to exactly where the items are.
Or to go back to that hybrid model, maybe you don't even walk the aisles for the staples.
What do you mean?
Maybe you order the toilet paper and the detergent on your app before you leave the house.
Yeah.
You pull up, that stuff is loaded into your trunk by a robot or an employee, and then you park and walk in just to buy the fun stuff, like the steaks and the wine.
So you're splitting the chore from the experience.
That is the hub model. If Amazon can crack that, if they can make the boring stuff purely logistical and the fun stuff purely experiential, that is a value proposition that Walmart really struggles to match. Their stores just aren't built for that kind of split flow.
It's bifurcating the shopping trip.
Yes, and that's where the synergy buzzword from the report actually means something. It's about integrating the digital efficiency with the physical necessity.
But there's a risk here of confusing the customer, right? I mean, Amazon Fresh, Whole Foods, Amazon Go, now the Superstore, the branding is getting muddy.
It is.
If I'm a consumer in Chicago, which one do I go to? Whole Foods for organic, Amazon Fresh for leaves, whatever that is, and this new place for bulk.
Brand dilution is a real risk. They are fragmenting their own physical identity. But I think they view this as A/B testing on a massive scale. They'll just throw everything at the wall.
So this is just another test.
Whole Foods is the premium tier. This new store is the mass market tier.
It's the Amazon basics of buildings.
That's a perfect way to put it. It's the Amazon Basics Supercenter.
So, okay, if this works, if they actually crack the code in Orland Park, what does the future look like? Do we see these 200,000 square foot beasts replacing the dead Sears and JCPenney anchor stores in every mall in America?
I think we see them replacing the malls entirely in some areas.
Mm-hmm.
Or, more likely, they become the new town centers of logistics.
A logistics center.
Yeah, you don't just shop there. That's where your returns go. It's where your drone deliveries launch from. It's a node in the network that just happens to have automatic doors you can walk through.
That's a sobering thought for local urban planning, but it also shows that the death of physical retail was always kind of a myth. It's just an evolution.
Look, we're physical creatures. We occupy physical space. The idea that we would retreat entirely into the metaverse for all our commerce was always a bit of a Silicon Valley fantasy.
But the irony is that the Silicon Valley fantasy factory is the one now pouring the concrete.
Because they realized that to win the cloud, you have to win the ground.
Yeah.
You can't distribute atoms with bits alone. At some point, you need trucks and shelves and loading docks.
And deep pockets. We can't ignore that. The stock is trading around, what, $233? There was a little dip recently, down a couple percent, but that's irrelevant. They have the capital to bully their way into this market.
They do, but money doesn't guarantee culture. Walmart has a culture of retail efficiency that is embedded in their DNA.
Right.
Costco has a culture of member obsession. Amazon has a culture of digital innovation. And the question is, can you transplant a digital culture into a concrete box? That's the friction point.
I keep going back to the staffing. A store that size needs hundreds of employees. And Amazon has had a, let's just say, a tumultuous relationship with its warehouse workforce.
That's putting it mildly.
Managing a customer-facing retail staff is a totally different beast than managing pickers in a fulfillment center.
It is. In a warehouse, efficiency is the only metric. In a store, service is the metric. If you treat your store staff like algorithms, the customer experience just rots. We've seen that in other chains that cut labor to the bone.
And if they run this store with the same ruthlessness as a fulfillment center, it will be a miserable place to shop.
And nobody wants to shop in a miserable place, no matter how cheap the TVs are. That's the soft skill gap Amazon has to bridge.
Okay, so let's wrap this up with a forward-looking thought. We have the data. 225,000 square feet. Bigger than Costco, bigger than Walmart. A hybrid logistics hub disguised as a grocery store.
A Trojan horse for their supply chain.
A Trojan horse? I like that. For you, the listener, this matters because it signals a huge shift in how goods are going to move through our cities.
It's not just about where you buy milk anymore.
No. It's about the very infrastructure of the suburbs changing to accommodate these faster, denser delivery networks.
And it challenges you to vote with your wallet. Do you want the convenience of the Amazon ecosystem extending into your physical world? Or is there value in that fragmented, diverse marketplace of competitors?
It's the Wally future versus the Main Street past.
And the Wally Futures is currently under construction in Orland Park, Illinois.
So here's the final provocation I want to leave everyone with. We usually assume innovation means making things smaller, faster, invisible. Cloud computing, right? But Amazon is betting that the next phase of innovation is massive, heavy, and impossible to miss. If the company that killed the bookstore decides the future is a library-sized warehouse you can walk into, maybe we need to rethink what digital disruption actually means.
Maybe the ultimate disruption is admitting that the physical store had value all along. You just needed a trillion-dollar tech company to reinvent it.
Paradoxes all the way down. Thanks for exploring this massive concrete experiment with us.
It's going to be a fascinating case study to watch.
We'll be watching the construction in Chicago very closely. Until next time.